Let's get into some earnings. So we got earnings in a couple weeks. We do have a date, February 3rd. So first week of February. We've been talking about SARS for a long time on this channel, ever since Arnie and Amir kind of dug up what is going on with that expense. Raymond James, a couple days ago, is one of the first analysts that outside of Bank of America that came out and said, hey, we were expecting 6 cents a share in EPS. We are bringing that down to 1 cent because we are taking into account a $120 million SARS expense that the company must take on because the stock was over $50 for a certain amount of time, got to $70. And as a result, you at least have one Wall Street firm lowering their expectations on earnings, which is important because obviously if the expectations are lower, then that means that, if Palantir reports 1 cent when everyone was expecting 5 cents, you've got algos that can trigger and potentially sell off the stock. Amir, what were your thoughts on this? And do you think the other analysts are going to now set the bar at 1 cent versus 5 cents?
They were definitely listening to us. And, I haven't really spoken about this, but I have had actual $500 billion funds reach out to me personally, and they will ask me a lot of questions and then just cut the conversation because they just want to get information out of us. So they are probably watching.
Did you charge them? Did you charge them a fee consulting?
I should.
Did you get them to buy your spreadsheet?
No, I haven't. Probably someone has undercover, but no. Revising down EPS from 5-6 cents to just include $120 million impact. It's really simple to do. The information is out there. They were trading above 70 for such a long time. It's just logical that they would incur that expense. It's not guaranteed, of course, but it's likely. And I think that's bullish for the stock because essentially they won't miss if they include that cost. I think most investors and most headlines are generally focused on the actual EPS beat or miss. So let's say a 2 cents EPS is seen more positively than a 6 cents miss. So even though the actual result is higher, they just care, did they beat or did they miss estimates? And I think largely Wall Street still don't get Palantir at all. I mean, recently we had Keith Weiss be replaced at Morgan Stanley after ensuring that their clients didn't partake in all the Palantir gains the past few years. But the new analyst still doesn't get it. I just made a 1-hour video. I go through the whole report. I'm like, you guys still have no idea. Sure, they raised price target from 28 to 60, but the report is so thin. So I think there's still a lot of understanding on Wall Street and trying to care more about Palantir. The SARS thing, I don't know. I'm pretty convinced that we played a huge role in that, and because even Mariana herself, I mean, it's not our idea. I mean, I didn't notice it originally. It was Mariana of Bank of America that wrote it in her report, but she didn't even revise down her estimates. So I don't know how that works out. But yeah, I think bullish for the stock if more Wall Street analysts would recognize this expense because it's likely to happen, and it's so simple. You just take whatever your net income projections were, you just apply $120 million cut to that, and you have your new estimate. It's so simple.
Quick super chat here from Rob. Amir, did the fund sound bullish or bearish when they talked to you?
I can tell you that they are trying to get on this train. That's the general impression I have, and they are kind of clueless, and they just want to know about Palantir. That's
when did these conversations happen? Just curious.
No, it's been the past. I think the first time I told Amit about it was a quarter and a half ago, so 4 or 5 months ago.
September
when it began.
I guess I'm just curious because I'm still seeing a lot of the EPS gap estimates on average about 5 cents as of still, and the EPS revisions have gone up. 13 of the people that are covering the stock and 0 have come down. So I'm kind of curious as to
they're trying to tank it.
So yeah,
right?
So this is the first revision down that we have seen publicly, I believe, and I hope more follow because that would be really good for the stock. Because if they miss on EPS, it will be by a huge margin because it's just senseless. Why wouldn't they just include that. I mean, the information is out there. I mean, it's obvious. Like even Mariana, the one that originally brought it up, she's not revising down her EPS estimates. Like, what's the deal with it? Why aren't they doing that? Are they like trying to engineer an EPS miss? I don't know.
Yeah, I was gonna say, do you think that this
Okay.
brings the opportunity to allow institutions a better buying price? I mean, it makes sense. I mean, think about it. If you wanted to take this stock to below $60, this is probably your best shot to do it cleanly without looking, like fudging anything or shorting the stock. This would do it.
And this is also not a conspiracy. I mean, we've seen this time and time and time again. And by the way, Louis De Palma, one of our favorite Palantir analysts, being sarcastic for those that don't know him, in Q2 of 2023, he tried to raise expectations on earnings to 550 million. Palantir got it for 533, and the logic was that they're going to pull forward SPAC revenue. It's like, what? No, they're not. They said 533. They're not getting some SPAC revenue. And so we've seen this in the past. Analysts have tried to raise expectations to bring the stock down. So who knows? Maybe this is what's happening right now.
I mean, the simple thing is just looking at the revenue estimates consensus. I think it's like 26, 27% all the way through 2026. Like, who in their right mind only sees Palantir growing 26 to 27% through 2026? I mean, it's just beyond me. I don't know.
Well, I think
I'm seeing.
Sorry,
go ahead.
No,
okay.
Go ahead.
I'm just seeing here. Yeah, 776 million is kind of the estimate, which year over year, that's about 27.7% year over year growth compared to the same quarter in 23. So I think that alone is also very bearish for the stock, just based on the fact that it might touch 30. I don't understand why it wouldn't. So yeah, there you go. Sorry.
Yeah, no, I was just gonna say, you also saw on that chart that you just brought up there too, like everyone raised their EPS expectations. It really does kind of seem like they want a better buying price, and this is the opportunity to do that. Do you think that Palantir? I don't think Palantir cares enough about their stock price to buy back shares just to offset this.
Not at all. Not at all.
Just knowing Carp, he just could care less. Fine, you take it down. It's, hey, they don't have to pay SARS again for a little bit of time. But they know that what they're doing and what they're delivering. I think, to your point, Amir, there's a lot of analysts that still don't understand the stock. Like, I was listening on Motley Fool, and there's some great analysts on there, but there's some that were covering it, and they would give it a 7 out of 10, but they kept hounding on the PE and saying that, how are they going to expand and get their growth rates higher? They haven't delivered on what they, Carp was promising for previously 2 years ago on growth rates. And how can they expand? Where's their moat? And I'm like, you don't understand the technology. You don't know what an ontology is. You don't understand how they've literally have been taking over industries, and you're still just saying this is a defense stock, when actually there's more commercial revenue than defense now. So it just kind of shows how lazy a lot of analysts can be.
Yeah, it's a good point. This Morgan Stanley report that I went through, it's 22 pages. All it discusses is like PE, price to sales, EV to sales. I'm like, you guys don't understand this business at all. And I think a similar thing happened to Robinhood, didn't it? Where like there was this expense that you would be aware of if you actually looked, but then when the earnings actually came, like Hood missed. Was it also on EPS? Because analysts just didn't take like something that was into the public into account, and the stock dropped. I think that's when my wife bought in, and now she's like up 2x on Robinhood. So I don't know, maybe that's an opportunity for us as well. If the stock tanks, might be a great opportunity for the people that actually are aware and see like, no, this is not related to the business itself. It's not anything related to operations. It's just that they are compensating employees. The stock ran up and it happens, It's not related to like, it's not bearish for the business at all.
Matt, your thoughts on this SARS situation with Raymond James and them updating it?
I don't know. I think I'm just kind of confused that, all these people talk to Amir, but everyone's raising their EPS. Something's fishy.
No. To be clear, no bank has reached out to me. I'm talking funds only. So
Okay.
people
Sorry,
who manage
that's
capital,
my.
no
Yeah,
banks,
you were
no
talking
analysts.
half. I don't know if you said $500 million or $500 billion funds, but
Yeah, $500 billion fund has reached out to me personally
yeah.
to ask
So
about
I just
Palantir.
find it a little interesting that everyone's still raising. It's quite surprising.
Yeah, I mean, I think it's kind of weird that they're raising as well, but I agree, dude. If you've wanted to get Palantir, because I was talking with Sachin the last a couple weeks ago, and he said the move from 20 to 40 was good, the move from 60 to 80 was good, but the move from 40 to 60 was like it just happened, right? And like that was the time where people were even thinking of like that's when they were getting introduced to Palantir because they were excited from the move from 20 to 40, and then it just got away from them so quick that and then from 60 to 80 it ran up. So if you would want it to get back to 40 to 60, the easiest thing you could do if Palantir doesn't mess up on the earnings, which I think they're going to keep 30% growth. I don't think they're going to grow 27%. So I'm expecting closer to 800 million in revenue, is have a nasty headline. Palantir misses EPS by 90%. And no one's going to care, dude. We are going to care. Like Robinhood, I know exactly why they missed. And no one cared. The stock was down 30, but like no one cared. It was just a miss. Now it recovered kind of quickly, but that was an opportunity to buy the dip. So if we get an irrational move, maybe that is another dip buying opportunity.
Yeah, I don't know. I think the possibility is there. You're starting to see people that were long-term holders, in the community start to take some off the table. Some people that we interact with on a regular basis here in Palantir Weekly, other folks that are just in the community. So I mean, I think you could see some people running for the door if they start to see some uneasiness in the fourth quarter earnings. Now we've been kind of pleasantly surprised; things have seemed strong. But if you come under a 30% growth handle year over year, granted the fourth quarter was pretty strong last year, if you guys remember, but even if you come under a 30% growth handle, that might freak some people out. And then same thing with the EPS miss. It might have a 15, 20%. People are like, oh shit, it's over, right? The game's over. Let me get out while I can. Arnie was right. Amir was right. Roy was right. I need to trim, and next thing you know, you have this mass exit for the door and you could easily see 10, 15% in a day get lost.
Yeah, I mean, you watch the legacy media channels and what they do, and I don't know. I don't want to throw conspiracy theories out there, but it definitely seems some fear mongering of when things, literally like 3 days ago when we were watching, you heard everyone talking about the AI boom's over, everyone's switching and everything, and then like 3 days later, we're like recovered all of those losses, right? And so you could easily see some misses that happen for quality companies and just the world is over type of deal, right? And I still think a lot of legacy media is not a big fan of Palantir, so I could easily see them really piling in on that, and that may give us a great opportunity to lower the cost base even further,
Dom, do you think they have spent money in Q4 buying back shares?
This is the question I just, we were talking earlier, like, do they want to counteract this SARS and keep it just steady Eddie? And do they want to show that that's how they want to use their money? I don't think they want to use their money that way. Like there was the rumors. I don't know if it's like, is it done? If they've invested in Shield AI, I know that, that's the drone company that they recently reports have been that they want to back that. They know a lot about drone technology. So if there's anyone who I would want them investing in, it's defense stocks and things that are going to expand because warfare will change. But I don't know if they bought shares back. I really think that they like that cash cushion because it does give them flexibility for weathering storms. And I still think we have unprecedented times ahead of us, right? We're not out of the woods yet. So it'll be interesting.
I'm with you there. I think we're definitely not out of the woods. I would want to see them for buybacks be conservative like they've been for the past 2 quarters, right? So I think we've only bought about $60 million worth. If I remember, I think the second quarter was 40 million. the third quarter was something like 20 or 30 million. It was still rather small. Maybe it was 19. I don't know. I'm getting the numbers mixed up, but it hasn't been like, even though they have $1 billion authorization, it has been a lot of amounts. I would much prefer them do 5 to 10% of ops cash and kind of keep it consistent. And as that grows, eventually we'll get to a point where we start to buy back and offset fully the share-based compensation. But like you said, I think that there's better things to use the capital for than buybacks, in my opinion, especially with the return on capital and gross margins that the company has.
Yeah, I agree. I don't really want to see buybacks. So my philosophy around that for Palantir specifically, I see no reason to expend all that capital when risk-free, I mean, the US Treasury yield is at like 4.7% now. So, and it's been elevated for, years, and they've benefited massively. So just keep growing that cash pile, have it work for you. And you can make a lot of good uses of that cash when they become cash constrained, because Carp has been saying for a long while now that they're not cash constrained in terms of growth. Like just pouring more capital won't necessarily yield like an equal amount of return into revenue growth yet, because they don't have a model where they can scale that way. But I believe into the future, I don't know if Dom has any like sales expertise on how that would happen into the future, but I believe there will come a time when they will need to pour some capital into their growth, and then they will have this huge war chest. So yeah, I'm fine with not seeing any buybacks. And just to be clear, you can't offset the actual expense by buybacking shares, but you can offset the, of course, dilution, which is maybe what you were referring to. But just so there's no confusion in the chat, like they will have to incur the expense regardless. Yeah. So yeah.
They might be able to offset it and it'll help with EPS in future, but like you stated, exactly, it's going to hit 120 million is going to hit the GAAP EPS, the GAAP earnings regardless. But yeah, even if they bought it back, it would still only, yeah.
Also, if they don't think they're undervalued at 60, 70, like they probably are not going to buy back their stock.
Right. And I think too, to that point, Amir, I'm looking at a old article that our buddy Arnie did back in May on SARS. And someone asked in the chat, what is that? So it's the stock appreciation rights to employees. So instead of just giving stock-based compensation for being an employee, they actually leveled it up and said, the stock has to be above $50 a share. We have to meet these milestones, and they're performance-driven stock-based compensation, which I remember our conversation when this was first announced several months ago. We were excited about that because it now drives behavior around, you don't get stock-based compensation just for us being employees. You get it for us furthering the mission. And the type of people that they hire, I think, are okay with that. And now they get to reap their benefits, right? So I think it's a very healthy reward. It's just going to be interesting to see how it's blown out of proportion.
So if they're not going to spend their money on their own stock, then maybe they're going to spend their money investing in some new companies. So we got Shield AI that Palantir has been working with already. They signed a official agreement in December of 2024 to be working with them. They're in talks to invest at a $5 billion valuation. I believe Shield AI, it's definitely one of the first to deploy Warp Speed, which is Palantir's new manufacturing OS, but their valuation, I think 6 months ago, was $3 billion. So this is a company that is rapidly growing, at least in terms of valuation, and they are a drone manufacturer. Dom, let's start with you. Good idea. And do you think Palantir should start using some of the $5 billion in cash they have to invest in more of these companies?
Just not as rapidly and wildly as they did with SPACs. I think they've learned their lesson on that. It sounded like a good idea. The thought made sense back then, but they're really staying with this type of company in their area of expertise. And we know with the market, I would anticipate 2025 and 2026 to see a lot more mergers and acquisitions in the market, especially when rates come down a little further in the back half of this year. You're going to see a lot of money that was on the sidelines, and you're going to see a lot more consolidation. So for them to invest in a company like this that is who knows? Maybe in a year from now they go IPO. The investing in them could really be a wise partnership as well as return on any shares that they have. Same thing if they did the same thing with Anduril or anyone like that. I could see them investing in SpaceX or other partnerships like that. That, you know, we know that robotics, space, and defense spending will increase here in the next 3 to 5 years. So I'm okay with it. I think it's a smart move.
Matt, you think they should invest in Shield AI?
Yeah, I actually thought it was. While I agree with Dom, I think they shouldn't invest at the pace that they did for the SPACs. Kind of like with the buybacks, I think that they should allocate a certain percentage of whatever they make on a quarterly or annual basis as setting aside capital for ventures like this and partnerships like this. I honestly was pretty disappointed when they walked back on what they did with the SPACs. Yes, it might have been ill-timed. Yes, it might have been too fast. But the intent, and I think the long-term benefit of doing that on a long-term basis, and not just doing it on a, hey, let's just throw $1 billion into the market and see what sticks because we have all this money from direct listing. Let's do a very consistent 10% of our ops cash every year, throw it into the market and help companies not only develop because they need capital, but two, benefit from their appreciation and also demonstrate that we are a company that helps Harbinger and use software to be able to create companies from the ground up. And if the companies are innovative like they have been, then they can help with infiltrating other organizations and also get other verticals that, as they expand, you know, hopefully the Palantir brand and software usage within that industry will do well. And I think that was the intent around the SPACs. And I don't think that they should have ever stepped away from that. Obviously, all their capital that they've been getting over the past 3 years since that SPAC kind of debacle has all gone to the balance sheet. But we've grown from $1.5 billion to $4.1 billion now. And it's like, or maybe it's more than that. I don't know. I have to double check. But regardless, you're sitting now on $2.5 billion extra cash. What would have been wrong with spending 250 to 300 million in investing in other companies? It would have secured more revenue, which would obviously at the end of the day trickle down. You know, I like the intent of the SPACs. I never thought they should have stopped.
And to your point, Matt, this kind of leads us to the conversation of Boundless Discovery, which Amit did such a great job of interviewing those guys. I could see them using the money for allowing more startups that are innovative and disruptive to utilize the Foundry technology, right, and AIP, because there are cloud computing costs and other things that Palantir has to take on when people, you know, use the product for free. I could see them starting their own kind of like what NVIDIA has. NVIDIA has their Inception Fund. NVIDIA has 6,500 AI companies that they basically, you know, discount their technology so they can get off the ground and running. And a lot of times they end up negotiating shares and ownership to continue that kind of partnership. And so I think that would just be brilliant for them to continue to do.
I mean, I guarantee that the usage of warp speed, and I want to get Amir's point because I haven't let him talk about this topic yet. But the thing with warp speed is I'm sure that happened due to a collaboration with a manufacturing company that they were like, you know what, this should be something that, and so if you start doing that with other companies that are maybe innovating or part of a different industry, then you come up with new things like warp speed that
was the whole thesis behind the SPACs, right?
Yes. Yep, exactly. So I just don't think that they should have ever stepped away from it. Did they get slapped on the wrist? I think they did, but it goes back to what Dom stated, which is they threw a bunch of money at once, right? You have to take strategic bets. You can't just be like, we need to put $1 billion to work. It's like, no, you have to think about the longevity of what's going on in each and one of those businesses.
Yeah, I have good news. We are soon break even on the invested capital into SPACs. We're only down 5%, and at the bottom we were down 78% on the invested capital. But yeah, I agree with most of the points raised. You know, for me, SPACs weren't a mistake. So I agree with Matt. I think it was very strategic. They spread it out across many industries just for the R&D. Of course, we had the SPAC bubble. The SPAC bubble burst, so the actual equity tanked a lot. But I mean, to this day, they haven't held any SPACs for 2 years now. By Q1 of 2025, so it's been 2 years with no SPACs. We still receive revenue from those contracts, and as I mentioned, we're soon to be break even. So all that revenue essentially was free. All that R&D was free across a multitude of industries. So if you look at each SPAC, like, okay, this one is related to logistics, this one is related to autonomous vehicles. So it made a lot of sense. Of course, I agree that maybe the way they went about it wasn't the actual best, but the core idea is smart. And as for Shield AI, I always felt that it would have made a lot of sense for Palantir to have an ownership of Anduril, to actually invest in Anduril when they had the opportunity. Now Anduril is like $100 billion company about to like rival Palantir for market cap soon. And perhaps this is a similar situation where they have actual insight into the business and see something great that isn't as accessible to the public eyes, like for me and you. Like, I don't know what makes Shield AI so great. I don't know what the value proposition is investing in them, partnering with them. I think that the partnership part, as with the SPACs and as you guys have mentioned with Warp Speed and so forth, I think the partnership side is where the real value is for Palantir, and then leveraging that product further. So there could be strategic, it could be monetary if they like expect to see some equity returns. I'm not sure, but I think they've learned their lesson. So any move they make in terms of investing into businesses, I think it's a pretty well-grounded one at this point.
I'm confused how we don't own a piece of Anduril, because Founders Fund has a ton of Anduril. That's Peter Thiel. I kind of feel like Anduril, I don't know, maybe there's a world where they didn't want Palantir to have any control. I don't know. It's weird. That's very weird.
That's one that boggled my mind. I just, totally can't figure out how that didn't happen.
I think we have talked about this before, but it's such a perfect partnership with Anduril on the hardware side and Palantir on the software side. I just wish this was like one and the same company. It would have been like unstoppable, probably regulated up the wazoo because of like monopolistic tendencies. But I don't know. I just feel like it would have been such a great partnership. And they are partners. I mean, they are bidding for contracts together. They're partnering up for Titan and a bunch of other contracts. So it makes a lot of sense. So it's weird that they don't have a stake in each other, frankly.
Yeah, and they both work together on the Titan contract as well.